Okay, so I'm recording. Last time my daughter, she was just making so much noise. I couldn't put that on YouTube. She was just making so much noise. Okay, so tonight I'm going over my mortgage and what I plan to do with it. Now you have to take certain scenarios into consideration. Are you gonna still make the same amount of money, or nothing is gonna change? So I hope that I'll still make the money and I could implement my plans. So I have two mortgage calculators here, Karl Marx calculator and US mortgage calculator. First calculator I'm going to go over is US mortgage. I love both of them and I use both of them. So US mortgage. Everything is already pre-filled. Home value, down payment, mortgage amount, interest rate, how it's amortized. Taxes and insurance, I could take that off right now because we're just going to be looking at the principal and interest payments. That's all we'll be looking at, right? So I'm going to take those off and take the extra payments off and hit calculate. And it's going to give you a nice little chart here that A is going to show you the down payment. B is show you the principal. D is the interest, and it calculates 1480.28 is principal and interest towards this loan. Then it's gonna give you a schedule in years. It's gonna take up to 2049 for me to get to 100% loan to value and pay off this loan. So by 2049 is if I paid every month religiously without making anything extra, I'm gonna pay $203,248.29 in interest if I pay everything religiously and nothing extra. So, but we over here, we understand, and we're going to use velocity banking to cut this down. So please, everybody, keep that 203,249.28 in mind and watch your mind be blown of the amount of money that you're going to be saving. So that's the schedule. So let's go up to 2020. That's the first full year I'll be paying on the mortgage. The total interest I'll pay towards the mortgage is $6,344.86 and $11,418.45 in interest. So I'll make $17,763.31, and only $6,000 of that is going towards interest. Okay, and every year it's like that until I see what year you start paying more in principal and less in interest. That's called the break-even point. That's 2030. 2030 is the year you start paying a little bit more in principal and less in interest. And 2030. So let's see, 2019 minus 2019. 11 years. Wow, 11 years. Have you hooked for 11 years? So now you're going to go over to the chart. And you're gonna see green is the principal payments, and orange or yellow, if whether you're colorblind or not, is the interest payments. You see, for the first half is when you pay more in interest than principal, and then as the year goes on, it teeters off and you start paying more in principal than interest. The banks at this time get their money, but a lot of us Americans, what we do is we refinance and restart the clock. So we stay in this part of the loan the first 5 years, which is the most expensive part of the loan. Okay. So a lot of us who are watching this already, this is not what we're gonna do. That's why we're watching YouTube, to figure out ways that we could pay this off faster. So okay, so here's my plan for this loan. I'm gonna be making extra payments. I'm gonna be making quarterly payments of or half yearly payments of $45,000. Where am I gonna get $45,000? I'm gonna chunk. That's where I'm gonna get $45,000 from. I'm gonna chunk. Hopefully I have that much in available credit. It depends. That's what I want to do. I don't have that much in available credit yet. I only have 11,000. So my hope is to get more money. So my hope is about $45,000 divided. I want to do it every 2 months. So that's $15,000. So I just need $15,000